Hey everybody, and welcome back to Life Be Life, and where we talk about real stuff that affects your finances and mine. I know this is kind of old news like 3 months ago, old news, but this is something that is very important. I wanted to bring up, I wanted to talk about, and since this is my commentary channel, go ahead and subscribe so we can grow. I want to run it back because I feel like at this age, this is some important news. Okay, this is what we really need to be focusing on, especially those in their mid 30s, early 30s, even late 20s. Do y'all really want a 50-year mortgage? Do y'all? Like, think about it. We already have 30. Do you want a 50? Let's talk about it, okay? So I'm going to be reading off of this article from euronews.com. I have not read it yet, so we're going to read it together. The title is What to Know About the 50-Year Mortgage Proposed by the White House. And this was written back in, is this December? No, this is November. Basically, the White House is considering backing a 50-year mortgage plan to help alleviate the country's home affordability crisis. Experts say the proposal has several backdrops. Duh. The U.S. government have floated the idea of a 50-year mortgage payment plan, drawing immediate criticism from policymakers, social media, and economists who say a longer real estate loan would do little to solve other core problems in the housing market, such as a lack of supply and high interest rates. Bill Pulte, director of the Federal Housing Finance Agency, said on X over the weekend that a 50-year mortgage would be a complete game changer, in quotes, for home buyers. FHFA is the part of the federal government that oversees Fannie Mae and Freddie Mac. These names, y'all. Fannie Mae, Sally Mae, Autumn Mae, y'all get on my nerves. Stop. Which buys and insures the vast majority of mortgages in the country. The 30-year mortgage is a uniquely American financial product and the default way to buy a home since the New Deal. Wow. So other countries don't have 30-year mortgages. That's good to know. Politicians and policymakers at the time wanted to create a standardized mortgage that borrowers could afford and pay off during their working years, when the average lifespan of an American was 66 years old. The average lifespan at that time was 66 years old. And I don't know what year they're talking about. I probably have to go back and do my research. But isn't the retirement age right now 65? Isn't it? Okay, so 66 years old. Let's go 30 years back. That's 36 years old, right? A lot of people already bought their homes, I think, by their late 20s, early 30s. So you're basically paying this house off your entire life, your entire adult life. Lower payments. Extending the life of a mortgage to 50 years would decrease a borrower's monthly payment. And I think this is the entire premise of the 50-year mortgage, right? Because of the way house payments are or mortgages are so high right now, because the housing prices are high, they're trying to alleviate the pain by extending the mortgage in order for us to have lower payments. But just like in a car deal, when you go and purchase a car, they're doing the same thing to where, and maybe I do another article on that. Let me write that down so I can remember. What they're doing is basically trying to gaslight us into thinking that these lower payments are way better no matter how long the term of the loan is. And that's where it gets very sketchy, because the whole point, I want to say, is not extending the loan. The point is to bring the prices down, make it more affordable to what we are now, bring it to us. Extending the loans and just keeping housing prices expensive does absolutely nothing at all. So you're telling me back then, when my mom first purchased her home, I think she said she purchased her first home in the States at about 80K. She was only making 12,000 a year. And granted, my dad was working as well. So two income household, I'm pretty sure they were probably, I don't even know if they were making 45, 50. I don't know. My mom's only making 20, 14 or 12. I know my dad wasn't making only 12. I want to ask him, to be honest, but probably like 40, 45, right? And your mortgage is 80. That's pretty good. Okay. But nowadays, the average home in the US is, I think, 400K. There are not a lot of people in the States that are making six figures. So when it was 80K, combined income household was about 40, 45. That's over half, right? This was circa 2000, 99 to 2000. You can't tell me somebody who is making on average 60, 70, a lot of people are not scratching that 90, 100K. So say both parents are making 60K, right? A year. This is before taxes, keep in mind. 60K a year, that's only 120. That's not even half of the 400K that the average household is right now. And you only get shells for anything less than 100K, anything less than 150, to be honest. So having a longer mortgage loan just to decrease the payment, that does not make any sense. You're just adding interest. I'm pretty sure they're going to go through all of that in here. So let's keep on reading, because just off the rip, it doesn't make any sense. The average selling price of a home in the US was, oh, there we go. I haven't even read the rest, and there we go, because I've heard this so many times. $415,200. This is September of 2025, according to the National Association of Realtors. Assuming a standard 10% down payment and an average interest rate of 6.17%, the monthly payment on a 30-year mortgage would be $2,288, while the payment on a 50-year mortgage would be $2,022. So you only scratch off $200 for an extra 20 years. Is it really worth it? Come on. That is presuming a bank would not require a higher interest rate on a 50-year mortgage due to the longer duration of the loan. For real. I mean, it's going to happen. Come on, let's be for real. It's going to happen. If the extension of the loan has changed, of course the interest rate is going to change. It. It's a bank. They're in for the money. Because even more of the monthly payment on a 50-year mortgage will go towards interest on the loan, it would take 30 years before a borrower would accumulate 100K in equity, not including home price appreciation and the down payment. That's compared to 12 to 13 years to accumulate 100K in equity when paying off a 30-year mortgage, excluding the down payment. A borrower would pay roughly an additional $389,000 in interest over the life of a 50-year mortgage compared to a 30-year mortgage, according to an AP analysis. Basically, you are paying for two houses. If the average home costs $415, $415,000, your interest rate will be $389,000. That means you could buy two homes for the price of one. If you went to elongate your interest rate, your loan time, because what? That means you're paying more on the principal. So extending a mortgage from 30 years to 50 years could double the dollar amount of the interest rate by the homeowner on a median price home over the life of the loan and significantly slow equity accumulation, wrote John Lovallo with UBS Securities. Broader housing interest. A 50-year mortgage does nothing to solve one critical issue when it comes to housing affordability: the lack of supply of homes. I don't know. I'm sorry, I don't agree that's the issue. I'm always disagreeing with some of the things these experts are saying. I don't agree with that. There are so many homes on the market that are empty. There are so many homes on the market that are hoarded by people who have money. There are so many homes on the market that are abandoned. I think we just need to do a better job with taking care of what we have already on the market. I feel like we need to do a better job with regulating how many homes each person can have, or how many vacation homes or how many investment homes. Once those are regulated, I'm pretty sure you're going to see there are a lot of vacancies in the market. There are a lot of empty homes rich people, wealthy people have that are just sitting there. That's literally how rich people place their money in real estate. I don't have a problem with that being a tactic. I know that's a way that a lot of people can, start generational wealth. I don't have a problem with that. But I do think it should be limited. I don't think there should be certain number of people who are able to just hoard. And then now you have unaffordability because a lot of the time they're hoarding. So the pricing of the home can increase. And when the pricing of the homes increase, everyone in the neighborhood, their prices go up, their homes go up. And that's when the unaffordability steps in. I don't think we don't have enough homes. We have plenty of homes. And keep in mind, not everybody wants to buy a house. Not everybody wants to be a landlord, a homeowner. There are some people who don't mind being in apartments and who are renting. Because there are always going to be greedy people who are just going to sit on homes. Even if the homes are expensive and nobody wants to buy them, they don't care. They have the money, they can afford for those homes to sit there. And it happens all the time. Even in Dubai, there are plenty of residences that are empty and no one is living in them because they're just waiting for the area to increase in value for them to sell it. And that's all the time. So building more homes is not the case because I don't think we lack homes. Maybe we lack quality homes because nowadays a lot of the construction and the material that are used are cheap. Don't get me started on the mobile homes that are very cheap, plastically. A wind can blow it down, but yet they're up 300K, 200K. Like, come on. But yeah, no, I think we just need to regulate how many each person can hold. I think it's simple as that. Those who are, didn't I just read an article or I seen somewhere where they said Mark Zuckerberg built like 14 homes? Mark built 14 homes for himself. The solution is regulating the amount of homes each person is able to hoard, so prices are not extensive. That's when a lot of homes will be flooded back into the market, and hopefully the price will go down. But it's not about building more homes, because even if you build more homes now, they're still going to be expensive. States like California and cities like New York have recently passed legislation or made regulatory changes to allow builders to build homes faster with less regulatory red tape. That's another problem, the red tape. There is also the raw cost of home building in the country. Products such as steel, lumber, concrete, copper, and plastic that go into home constructions are now subject to tariff under President Trump. Many construction jobs are being done by undocumented workers, particularly in the Southwest, where deportations are impacting the ability of home builders to find enough labor to build homes. Home unaffordability was way before Trump. He just made it worse with everything that he got going on. But the hoarding was way before. The price increases was way before. Listen, it was better before COVID. But greed, ever since COVID, took over, and that's just the reality. People just got so greedy, and they realized they could get away with a lot of things, and that's what happened. Many of the big things that would address supply right now are going in the wrong direction, said Mike Conzal, Senior Director of Policy and Research at the Economic Security Project. Pult said on X that the introduction of a 50-year mortgage was just a potential weapon. Among other solutions, the White House has considered to combat high housing prices. Yeah, just bring them down. Just bring the prices down. Like, why is a one bedroom 400K? Why is a two bedroom 400K? Make it make sense. Americans don't live long enough. The average age of a first-time home buyer has been creeping up for years and is now roughly 40 years of age. A 50-year mortgage would be difficult to underwrite for a bank for a 40-year-old first-time home buyer who would be 90 years old by the time that home is paid off. The average life expectancy of an American is now roughly 79 years old, meaning there's 11 years of life expectancy not covered in a 50-year loan. Like, who thought this was smart? I digress. It's typically not a goal of policymakers to pass on mortgage debt to a borrower's children. Others have tried longer loans. Other parts of the financial system have extended loan terms with mixed results. The 7-year auto loan, hey, just spoke about that, has become increasingly common as car prices has risen and Americans keep their cars longer. Despite longer loan terms, auto loan delinquencies have been rising, and the average price of a new car is now $49,740 compared to the price of $38,948 for a new car vehicle 5 years ago. Student loans were originally designed to be paid off in 10 years, and now multiple payment options extend repayment to 20 years. Oof. Economists pointed out that a 50-year mortgage may be the opposite of helping with home affordability and would cause home price inflation by introducing more potential buyers into a market struggling with supply. We're not struggling with supply. We're not. We're not. There's enough homes on the market, I'm pretty sure. Go on realtor.com. There are plenty on the market. If we were struggling with home supply, there would be none available or just a few available on the market. There are plenty. It's not that we need to buy more or we need to make more. People just can't afford them. So the only thing is bring the price down. Like, is it? Is it that hard to comprehend? Trump downplays the idea. After significant criticism, President Trump seemed less enthused about the 50-year mortgage. When asked by Laura Ingraham on Fox News about the idea, President Trump said it might help a little bit, but seemed to brush it off. He brushes everything off. Under the Dodd-Frank Act, the mortgage giants Fannie Mae and Freddie Mac cannot insure a mortgage that is longer than 30 years. So any 50-year mortgage would be considered a non-qualifying mortgage and would be more difficult to sell to investors. Congress would have to amend U.S. financial laws in multiple places to allow for 50-year mortgages, and there seems to be little appetite for Congress to take this on immediately until he wants to go in and do something again where they're not saying anything, they just allow him to do it. So we'll see how that goes. But we're going the wrong direction. If you guys thought that immediately the best idea was to include a longer mortgage term where people could barely make that 30, barely make the 30. It's crazy. And it's so much that's into it. It's not just the mortgage term, right? It's not just, oh, it's 30 years. Insurance, all the bureaucracies of owning a home makes it more expensive. Taxes makes it more expensive. What's it called? The down payment, the 20% down. If you don't pay 20% down, it goes into your mortgage monthly. All of that makes it very expensive in order for you to not only purchase a home because it's already high priced, but to financially sustain it every month. It's hard. And then you put on top of that the uncertainty of jobs. It It was one thing back in the day, you became a doctor, you have a secure job, and you're able to get these high price homes. You're able to afford these things at the moment, like for the monthly payment. But now you can't do that because now a lot of the jobs are being taken over by tech. A lot of the hospital jobs, the healthcare jobs, AI, the big corporation are trying to put AI in charge of it. And now, didn't they just pass, or wasn't they talking about nursing not being a professional job or, a premium type of job? So now it's going to be downgraded. The pay, I'm pretty sure, is going to go low. People can afford homes because of so many other reasons besides the supply. Stop lying. Stop trying to act like it's just because we do not have enough homes. There are plenty of homes on the market. There are not enough affordable homes. There are people on the streets that are sleeping with no homes, nothing, no roof over their head, and they're totally fine. They're not looking for homes. So all the inventory of homes are already there. They're sitting there. They're collecting dust. They're rotting away. Ghosts are living in them. Squatters are living in them. The point is, prices just needs to go down. That's it. People do not want to pay $400K for a shell, and they have to go in and gut everything. They have to go in and replace everything. And now by the time you're done with renovation done cost $100K, $200K, $150. And now your home is supposed to be worth something with the equity that you put into it. And it's already just too high. Nobody don't want to pay for that. The prices just needs to make sense to what the wages are. If you guys don't want to bring up the wages or make the wages make sense to the living situation currently, then just bring everything else down. It's not that hard. But of course, capitalism and greed will never, never allow that. Capitalism will still prevail, and people will be on the streets. People will not be able to eat. People will not be able to afford anything. But yet, y'all think the society is going to keep on going seamlessly. It doesn't make sense. You cannot expect the top 1% to hold everything for the rest of society, because the masses are the ones that really hold up society, not the top 1%. Let's keep it real. I want to do a couple of TikToks so I could see what the streets are thinking about this, because this don't make no type of sense.
Everyone's freaking out about the 50-year mortgage that just dropped, but I think it's pretty genius. And if you're new here, I'm Theoni the lender. I've been a lender for 10 years. I help people every single day from this app buy, sell, and refinance. Let's get into this because I have such an interesting take on this that most loan officers do not share. And I'll start by saying that they don't share the same idea because they're loan officers, not loan advisors like I am. Everyone keeps talking about the amount of interest that you're about to pay over 50 years. And I will say it is pretty crazy. I saw an example for a $400,000 house that it was like 1.7 million in interest or something crazy if you kept that loan for 50 years. But what most people are missing is that the average homeowner in America only lives in their home for 11 years. And that is to say they live there, but they're likely going to refinance the terms of that mortgage. Like the likelihood of you having a mortgage that you get today for 30 years is very low, even if you live in that home for 30 years. And that's because you're going to do a cash out refinance. The rates are going to come down. So you're going to refinance. And every time you refinance, like right now, I'm taking people from a 30-year term to like a 20 or 15-year term. So the idea behind a 50-year mortgage isn't because we want you to be in this house for 50 years. I think that's actually insane that people are even in the same loan terms for even 30 years. The idea is that it gives you breathing room to qualify for a house. And that's the problem that we're facing right now. People cannot qualify. Yes, the savings is like maybe $200 difference from a 50-year to a 30-year, but that $200 difference actually makes a difference when it comes to qualifying for a mortgage. I just ran this example with one of my clients. They're trying to buy a $700,000 house. And if their interest rate was, let's just say worst case, 7%, they're going to be paying like $4,800 for that $700,000 house at a 30-year term. If they got a 50-year mortgage, then they're paying $4,000. But here's the kicker. Their initial budget was like $5,000. So they can still do a $5,000 payment and pay less than 30 years of that entire mortgage. And this is only because this
interest
is
rate.
their dream home. So they're going to be living there for probably actually 30 years. But if you're not going to be living in that house for 20, 25, 30, 40, 50 years, then the amount of interest that you pay in the overall amount is kind of null and void. Especially when you're working with an advisor like me, I tell my clients if you make $100 more to the monthly payment, you shave off like 4 to 7 years of that entire loan term. And of course, you're saving a ton of money in interest by doing that because now you're not paying the interest on the full term. So honestly, this is just like another tool in the toolbox for a strategy that you can use so that more people can just get into a house and then they can figure out that monthly payment later. If you're looking to work with a loan advisor, I am accepting new clients for the coming year. So head over to link in my bio to get started and follow me along here for more mortgage tips.
Oh, child, let me go ahead and hurry up and say what I need to say about this one. I might do a part 2, but my battery is about to die. So I want to wrap up this one real quick. Baby girl, you see how they try to I don't want to say the word, mind bend your mind. They're trying to dupe you. For real. They playing you like stupid, because I don't care if you're a loan, what's it called? I don't care if you're a loan lender or a loan advisor. I will not take her advice at all, because the root of the problem is I had to write down some questions because she was really getting on my nerves. Number one, don't hire her. Please, please don't. Please don't hire her. I'm sorry. Don't do it. This channel is to make sure you are well equipped financially, right? It's the little things. You don't have to go to, right now in 2026, you don't have to go to school, have to have a PhD in personal finance. It's the little things. Just listen to what they're saying and see if it really can relate to your life, right? If it correlates to your life. So one, don't hire her, because how you know rates will go down? How how do you know this? How do you know where the rates will go? You don't. So what you see right in front of you, take it as it is. If it goes down, good. If it goes up, you know you have wiggle room. But if you're comfortable to what you see right now, okay, take it. But don't take something that is already high up and you're hoping and praying, crossing your fingers that it's going to go down. And you don't even know what year it goes down. You don't know what legislation is going to come to add on fees, add on everything else to your home payment. So don't do it. Don't automatically think, oh, the rates are going to go down. I think they try to do that when it came to I think like 2021, where they were realtors were trying to sell houses. What were they saying? Like marry the home, date the rate, something like that. You don't know when it's going to go down. She doesn't know where it's going to go down. So don't do that. Next, why aren't people qualified? Because she was like, oh, the whole point is people are able to be qualified to get into a home. Let's get to the root of it. Why can't people afford a home? Why can't people get qualified? Maybe because the salaries are low, maybe because they can't afford it because of their job, their hourly rates. Let's keep it a buck. It's not, oh, because we need a 50-year mortgage, that's why people can't qualify. No, there are other reasons the system has set up for people can't qualify. So if the homes are too high and the paychecks are low, people won't be able to qualify. If we're going off of FICO scores and seeing that you missed one rent payment and now your whole score is down 100 points, people won't be able to qualify. If they're seeing that your money is coming in and out, you're having lapse in jobs, people won't be able to qualify. So come on, why aren't people able to qualify? It's not because their loans are only 30 years and they need 50 years in order for people to qualify. Let's keep it a buck. Last but not least, what if people do want to stay for all 50 years? Because she's over here trying to make you think, oh, you're not going to be in there for all 50 years anyway. So if you get a 400K home and the interest rates by the time you're done is $1.4 million, you won't even be paying it. How do you know? What if there are people who don't like to move from home to home and are willing and want to stay in a home for the entire 50 years? So what you going to tell them? Come on, let's make it make sense. Let's have good financial literacy and let's just move accordingly and stop listening to people who are giving you bad advice. With that being said, I want to do a part 2 so bad. So stay tuned for a part 2 and we will watch some more TikTok videos